AMD crushed. Snapchat beat on earnings, missed on revenue. So AMD reported 69 cents versus 67 cents. Listen to this. Revenue of 5.6 billion versus 5.2. Snapchat reported 14 cents EPS versus 11, but missed on revenue 1.3 billion versus 1.31 billion. Now, AMD absolutely crushed it. We reported on Intel last week. Intel sucked a whatever. So the bottom line is AMD the new company? I don't know, but I want to say some things. Look at our software here. They're up 4% after hours. Back in 2000, AMD hit a high for around $45 a share. It's currently at 75. It hit a 52-week low of 55. So from 2000 until October of 2022, that's 22 and a half years later, the stock was only up $10 on 45. So this is my point about, in the long run, stocks are a weighing machine. In the short run, they're a voting machine. And it got as low in 2016 of like $1 or $2 a share. Guys, this is what I mean. You have to be ready for these kind of things. The all-time high was in November of 2021 at 165. So in a matter of less than a year, it went from 165 to 55. Now, does that mean you shouldn't buy AMD? Absolutely not. That's not what that means at all. We're going to take a look at AMD. In fact, there's prices I want to buy AMD. Let's look at Snapchat real quick. All-time high, September 2021, $83. All-time low, just 3 months ago, $7.50. And it's currently Snapchat. Let's go to Snap, sorry. And Snapchat is, is that the right ticker?
Snap, SNAP.
Oh, there you go.
Yep.
$9.79, down 15% after hours. So, guys, what can I tell you? Look at this. Net income of Snapchat, minus 1.12 billion. They made money this quarter, which is great. But let's go focus on AMD real quick. Mo, you're pulling up their actual...
Yeah, the press release.
Okay,
so full year revenue of 23.6 billion, up 44% year over year. So I'm just noticing a couple of things in here. Revenue is up 16% year over year. Operating expenses up 109%. So just like everybody else, they're all spending. But that's not surprising. Everybody in that arena is.
But I will say, Mo, it's a lot better than the other people are doing. They
100%.
They beat on earnings. They beat on revenue.
100%. I mean, if any company has the justification to be spending right now, it seems to be them.
Seems to me.
Let's see. Revenue was primarily grown by embedded and data center segments. That's been a consistent thing that they've been doing.
Look at the gross margin. Go back up again. Gross margin was 43%, a decrease of 7 percentage points year over year. So even though they beat on revenue and profit, their gross margin was down, which is what we're seeing across the board as well.
So I don't understand what this means, but they announced the availability of this Gen 4 chip. EPYC. I don't know what this is, but it's been highly talked about in every article that I'm reading. So it's an important thing.
AMD has a high quality chip business. Intel, for those of you who know, obviously they're building a new factory. It's going to be a long-term play in our opinion. Yes. And hopefully the foundry business for Intel allows them to make chips for other people. That's a big money maker.
Yep.
AMD here, let's look at these 8 pillars here. Look at this. Look at this, Mo. 85-year PE, 95-year price of free cash flow, even with the fall in the stock price by that much.
Yeah, that seems a little bit expensive.
So I look at this saying, guys, AMD, their numbers look better than all the other chip makers probably in terms of growth, but it's possible to overpay. Mm-hmm. What growth rate do you have to see in order to justify 80 times earnings? Let me put it this way. Back in 2000, Intel was probably selling for 80 times earnings, and it has not seen that price since. Yeah. So you've still got to be careful. You still got to sit there and say, what is going on with the company?
For 2023, they expect revenue to be approximately 5.3 billion plus or minus 300 million, and that's a decrease of 10% year over year.
Do you see another big number here?
It's shares outstanding. It's
enormous. Their shares outstanding are up 64% in the last 5 years.
The reason I actually didn't say anything, I was like, it's got to be a glitch.
Let's look. Is it a glitch? Not a glitch, guys.
Not a glitch. Okay.
They had 1 billion shares outstanding 5 years ago. Now they have 6.3 billion shares outstanding. 1.63 billion shares outstanding.
It's totally ridiculous.
You know what this means? If the business was up 60%, you saw no gain as a shareholder.
Yeah.
Guys, this is what I mean. Like you've got like the story for AMD is take out the stock. The story is incredible. Great company, revolutionizing the industry, coming in, taking market share. Awesome. Great. Pay $2 trillion for it. No, Paul, it's absurd. Why is 100 billion absurd? Why isn't 200 billion? Like at some point between $1 and 10 trillion, there's a price that makes it absurd. All I'm asking you to do is figure out what that price is.
Yeah.
How do you figure out what that price is? Learn from us. Come here, subscribe to the channel. This is the key part here. I love AMD and I hope I'm a buyer of AMD. Just because I own Intel stock, which means don't do it just because I do it. Just because I own Intel stock doesn't mean I can't buy AMD stock. They could both be undervalued. In 1982, the entire market was selling for 7 times earnings.
Yeah.
It's currently selling for like, I don't even know what number, but it's a huge number. At that point, literally you could have gone like this and made double-digit returns for the next 10 years. Just throwing darts. So when it comes to these chip manufacturers, I hope the entire chip industry goes down 90%. I will own every company.
Every single chip. And that's a big thing is people, they pit these companies against each other, AMD versus Intel. I'm happy to own both if they're at the right price.
Yep.
Why wouldn't you not be?
Yep. So when it comes to Snapchat, I don't even know how this company...
I saw the funniest thing this morning. So Becky Quick on CNBC, she was talking about AMD is reporting earnings tonight, and we are going to bring in some analysts to break down Snapchat earnings too. I'm like, we're still talking about Snapchat? You had all these great companies reporting today, and we're talking about Snapchat?
I can't believe that Snapchat is still in the conversation as a social media company.
Juggernaut.
Unless you're single and trying to like send pictures that you probably
shouldn't be sending.
There you go. Then
That's it.
I have Snapchat now only because my fiance's kids have a whole chat where they send pictures of dogs and kids. That's it.
I know one guy that has Snapchat.
Mason.
Mason has it?
Oh, yeah, Mason loves Snapchat.
Brofman.
Oh, Brofman has it because he's a hornball.
Exactly.
Yeah.
Hornball.
Brofman's just trying to slide into DMs all the time. All right, so back to AMD.
Let's look at AMD.
Let's look at the analyst estimates.
Yeah.
All right, look at the profit growth, going to almost double in the next 3 or 4 years. All right, pretty solid. But again, if they increase their shares outstanding by 50%, you don't see the doubling. You get about a third of that.
It doesn't seem like they're stopping anytime soon with that share increase.
Revenue increase, yeah, it's grown. 50% growth in the next 3 or 4 years. Mm-hmm. Not bad. Yeah. But again, if they issue more shares, it's only going to screw you.
Yes.
They're diluting you. There are a lot of great value investors who won't even look at a company that's issuing shares that's increased their shares over the last 10 years.
I'm
okay with it.
Especially to this amount.
But I want to see at least there's a reason for it. Hey, we're obscenely expensive. That's how we did it in years past, but now we're not, so we're not doing it anymore. Okay. Mm-hmm. I get that. Mm-hmm. Now, the next question you have to ask yourself is, okay, big shot, Paul, then what price do you pay for AMD? Well, before we get into that, I really want you guys to know, like this software and this community here has really helped a lot of people. I get messages every day on Instagram and Twitter of people saying, Paul, my outlook changed listening to you. Now, it's not because of me. I'm just repeating words out here, right?
Yeah, exactly.
But 2 people can hear my exact sentences and one say, Paul, you're an idiot. The other person say, Paul, you're a genius. I'm here to talk to the people who it makes sense to. Does it make sense to you? Do the things I'm saying make sense to you? Do you believe it's possible to overpay for a good thing? If you don't believe it's possible to overpay for a good thing, I need you to do 2 things. I need you to, 1, take your head, go to your door right now in your apartment or house, and I need you to put your head right between the door jam and start slamming. Just slam that door right into your head because you're stupid. You're absolutely stupid. And next thing I need you to do is, once you're done with that, wipe the blood away. Go take all the money you have. Go to the bank, take all the money you have, go to the nice lady, slip a note there like you're going to rob the bank, and just say, give me all my money in hundreds. And I want you to go to the local soup kitchen and give them all your money. Because at least it's going to go to a good cause. Or the Innocence Project. I love the Innocence Project because a lot of people have the luxury, like you, of having money, but you're too stupid if you believe that it's not possible to overpay for a good thing. And there are actually people in prison serving life sentences for things they didn't do, would give their anything in the world to be able to be as stupid with money as you might be if you think that you cannot overpay for a good thing. But luckily, I'm sure you've made it this far in the video. You believe you can.
It's amazing how you brought that all together. At some point, I was like, where are we going with this?
Come on,
you brought it all together.
Listen, it really bothers me. I literally look at it. Like Mo and I were just talking earlier that we always tell people say, if I had your money, I would. I go, if you had my money, you'd be broke or dead. And I don't mean it for everybody, but there's a reason why people who win the lottery go broke. They can't manage money. If you can't look at a company, then you should just buy ETFs. But a lot of people watch our channel because they want to learn how to buy a company.
And guys, the reason we're doing this video is because it's earnings season. And for earnings season, we have a deal for you. So if you've been on the fence about joining the Intelligent Investors community, $7 for 7 days. Click the link in the description below. It's going to take you to everythingmoney.com. You will get into our great community, try it out, try Stock Analyzer tool, which we're about to run through right now. Yeah.
Here's how good a deal this is. I'm opposed to it. I was outvoted on this one. I didn't want to do this deal because I think it's too good. I swear to you, literally, I was just like, really? And Tim and my brother were like, just offer the deal for fun. I was like, you know what? I hate it. I don't like doing it. I don't want to give any discounts to anybody. And that's how much I'm opposed to this deal. And I swear to you, I'm not just saying that, it's absolute truth.
And guys, if you want to try the Oracles of EM, that is also $79 a month, risk-free. If you don't like it after 30 days, you get your money back.
Now, for those of you who might have taken my advice and slammed your head in the door, hopefully it joggled a few things, and now you're able to sit there and say, I can think clearly now. Paul, please continue preaching about AMD.
Call 911 after the video. You gotta watch this.
So guys, this is our Stock Analyzer tool. Our thousands of users in the community use this thing over 1.3 million times last year. That's just how important this is. So I'm going to do a 20-year analysis on AMD because I do believe AMD is here to stay. They do a high-quality chip. I have an AMD chip on my other computer, I think. This one is Intel. I think Intel's a great chip as well.
Yeah.
So I'm looking at this for 20 years. But I've got to sit here, and I got to look at the numbers, and every investment is the present value of all future cash flow, right?
Yep.
So we need to determine the future cash flows and estimate them. Mo's going to do a 10-year analysis.
Yes, I will.
Oh, boy. Revenue growth. Mo, what do I do here? What's their revenue last year? The revenue last year was, $23 billion.
Actually, I forgot to do, okay, there we go. All right, I'm going to taper that back.
No, that's too high.
That is way too high what I just did.
Yeah. 10.
Let's do, that's too low. Cash flow is better.
Yeah.
All right, okay, PE. Here we go with PE. This is always a tough one when you get these ridiculous PEs that are current. All right, let's see. Okay, I'm ready. You ready?
Yeah, I'm ready. So remember, guys, these are estimations. We don't know what's going to happen in the future. We're doing low, middle, and high on these estimates. Revenue. What'd you do, Mo?
5, 7, and 9.
What are you doing?
I don't know. I put in there 7, 10, and 13, and I was like, that's too high. Did you see this? This is what I'm looking at. This is why I changed it. Look at this jump. I mean,
yeah, but I think the chip industry really has a lot of. Okay, fair enough.
This cannot sustain.
You know what? I'm going to alter mine then. I'm going to do 6, 9, and 12.
That's the reason I did it.
Okay, I'm doing 6, 9, and 12. And by the way, 12% growth for 20 years is that's
insane.
Huge
that's
number.
Insane.
That's 8 times. That means they'd be doing like basically $200 billion in revenue in 20 years. Mm-hmm. All right, profit margin.
5, 6.5, and 8.
I did 12.
7.
I did 12, 18, 24.
Are you serious?
You know why? Intel had that. What's their gross margin?
44%?
Yeah, 45%. I think that's pretty, I think they're just dealing with a lot of growth issues and their overhead's going to be covered more and more. I think 5's way too low.
Okay, I'll go 8. How about 8, 10, and 12? Compromise?
Okay. You can do whatever you want. I'm just telling you, I think you're beating it up too much.
Then what about cash flow?
10 at 16, 22. 10,
16. Okay, so you went lower.
A little bit lower.
Okay, you went lower on cash flow.
A little bit lower.
I'm going to do the same thing. I'm going to go 10, 8, 10, and 12.
Okay.
Now, PE, this is going to be a good one.
15, 17, 19.
I did 14, 16, 18.
Okay.
I think they're reasonable.
And guys are going to be like, oh, Paul, the PE is 89 right now. It's like, but if it's about where it was current, that's not the way to look at it. What's the historical average for these companies? For not the companies individually, for companies in general, 15. So I've already beaten this up quite a bit, so I'm okay putting 15 here. 17, 19, 15, 17, 19. They have a high return on invested capital, about 14 or 15%.
Is that what it is?
Yeah, something like that.
Yeah, about 15%.
So desired return.
I did 12, 13, and 14.
I did 12 and a half, 15, 17 and a half. Because even this, it's still going to take some time. All right, analyze button. 6 numbers going to pop up, guys. And look how overpriced this thing is. 23 to 27, high side of 60 to 70, Low side of 40 to 50. Okay, and it's on my watch list at 40.
I'm 17 to 34, middle ground, but 24 and 35 is on my watch list.
So, guys, are we off? Yeah, we're off. I mean, we're off in numbers, but I look at this saying 40 because I do believe this middle number is a little aggressive maybe, but I'm okay waiting because I don't think it's that screaming of a deal right now.
Yeah, I'm going to increase it to 40, and the reason is I want to sell puts on it.
There you go. I'm going to change mine to 45. So, guys, if you like this video, I need you to do me a favor. I need you to subscribe to the channel, but also prove me wrong by signing up for 7 days for $7 because I was adamantly against this. So anyways, thanks guys. Appreciate it. Watch our videos because we do a lot of these earnings reactions this week. Thanks a lot. Take care.